Welcome to While We Were Distracted, the podcast where we explore topics that often get overshadowed in the rush of daily life.
Hey everyone, and welcome. Today we're going deep into Basel III,
Dazzle third.
which sounds a little intimidating.
Yeah, it can be pretty dense.
Yeah, and we've got a ton of material to cover, but that's what we're here for, to break it down.
That's right.
So we're going to be talking about everything from what it is to how it affects global markets, bank liquidity, even currencies around the world.
Absolute.
So get ready for some, hopefully, aha moments.
I think we'll have a few of those for sure.
I think so.
All right, so to kick things off, let's get right to it. What is Basel III? Like, imagine you're explaining it to someone who's heard the term, but really doesn't know anything about it.
Yeah, like why should they care?
Well, think of it this way. It's basically like a global rule book for banks designed to prevent another 2008 financial meltdown.
Okay, so that's like the big scary thing that we all remember.
Right, exactly. And this is actually the third ARD version. We're on Basel III.
So they've been trying to do this for a while.
Yeah, it's been building upon previous accords to try and make the global financial system more resilient.
So they keep kind of updating it, making it better.
Exactly. They're learning as they go, trying to stay ahead of the game.
Okay, so who are these people who are writing this global rule book for the banks?
Right. So it's the Basel Committee on Banking Supervision, or BCBS for short.
Yeah,
It was formed way back in 1974 and now includes 27 different countries, central banks, and regulatory authorities all working together.
wow, so 27 countries. That's got to be a lot of different perspectives and opinions to try to bring together.
It is. It's quite the collaboration, but the idea is to try to harmonize these banking regulations on a global scale.
Okay, I get it's a global problem, global solution, but how does this all actually affect ME? Like, I'm just one person trying to manage my own money.
Yeah, that's the key question, right? Well, here's the thing. Basel III impacts everything from how much banks can lend to the interest rates they offer, and even the stability of the entire financial system. And all of that has a direct impact on your money, how you borrow, how you save, how you invest.
Oh, okay, now you've got my attention. So let's talk about how this global rulebook actually works. Like, what are some of the key things that they're trying to control?
Right. So there are a few core principles. Let's start with minimum capital requirements.
Okay.
So banks under Basel III need to hold a certain amount of capital in reserve, which is basically like a safety net to absorb potential losses.
That safety net. Okay, that makes sense.
And then the current minimum is 7% of their risk-weighted assets.
Risk-weighted assets. That sounds complicated.
It is a little bit technical, but essentially it means that riskier assets require more capital to be held in reserve.
Okay.
So, for example, lending to a brand new startup that might be a little volatile is considered riskier than lending to, let's say, a well-established blue chip company.
Okay.
So a bank would need to hold more capital in reserve for that loan to the startup.
So it's like a sliding scale based on the risk. The more risk, the bigger the safety net.
Exactly.
Okay. What else?
All right, so next we have something called the leverage ratio.
The leverage ratio. Okay.
And this one basically limits how much a bank can borrow compared to its capital. It's all about preventing them from getting over-leveraged and taking on too much risk.
Yeah, makes sense.
It's kind of like, making sure that your credit card debt doesn't exceed a certain percentage of your income.
Yeah, don't want to get in too much trouble there.
Exactly.
Right. What's the third principle?
Okay, the third one is liquidity requirements.
Liquidity. Okay.
And these make sure that banks have enough easily accessible cash on hand to handle unexpected events, like a sudden surge in withdrawals.
So thinking back to 2008 again, they're trying to prevent that kind of bank run situation.
Exactly. Learning from the past, making sure that there's enough liquid assets available so they don't run out of cash.
Right. Okay. That makes sense. So all of this is affecting banks, but we mentioned global markets earlier. So how does Basel III impact things on a bigger scale? Like, what about those global markets?
Okay, so think about this. When banks need to hoard more liquid assets, like government bonds, to comply with Basel III,
Okay.
that can directly impact bond markets worldwide. You have increased demand driving bond prices up, potentially lowering yields.
So just to clarify, you're saying that if a bank, let's say in London, is buying up a bunch of bonds to meet these requirements, that could affect bond yields all the way over in Japan.
Precisely. It's all interconnected. We're talking about a global financial ecosystem.
It's all connected. Wow, that's pretty amazing.
It is, and this interconnectedness plays out in currency markets as well.
Wait, so we're talking about rules for banks affecting currencies like the dollar and the euro.
Yeah, so it's more of an indirect effect. For example, if Basel III makes lending in one country more expensive than another, it can influence capital flows, which ultimately impacts those exchange rates.
Okay, things are starting to get a little complicated here.
Mm.
So banks need more reserves, which impacts bond markets, which influences currencies. It's like this giant machine with all these levers and gears that are all impacting each other.
Yeah, that's a great way to think about it. It's complex, but it's all interconnected.
Okay, so we've covered a lot of ground, but I think this is a good place to pause and let our listeners kind of digest all this information.
Yeah, take a deep breath.
Exactly.
Yeah.
We've gone from the origins of Basel III to its impact on these global bond and currency markets.
Absolutely.
But there's so much more to explore.
Oh, there's a lot more to unpack.
So stay tuned, because we're going to be getting into the nitty-gritty of how Basel III affects your everyday life, like the interest rates you pay on your loans, coming up next time.
And we're going to dig deeper into how different countries around the world are actually implementing Basel III, adapting it to their own unique financial systems. So make sure you come back for part 2.
Yes, definitely stay tuned for more.
Don't forget to like and subscribe for the next episode on While We Were Distracted.